back. It's been a weak month of November for Bajaj Auto. The total sales have seen a decline of nearly 20% versus last year. Domestic sales are down 4%, but exports continues to be under pressure. Export sales contracting by 30% year on year. Rakesh Sharma, the Executive Director of Bajaj Auto, now joins in. Morning, Mr. Sharma. This is Reema here. Could you explain what happened in the month of November? We understand that there is a base effect. There is also a drop-off which comes, because the festive season was in the month of October for us. So month on month, there is likely to be a drop-off. But even then, a figure just over 3 lakh units is significantly lower, right?
Hello, good morning. But base effect is quite significant. Diwali moved by 10 days, and last year it was in, I think, first week of November, and this time it was in last week of October, and you have the month end in the middle. So the decline is entirely explained by the base effect. So therefore, it's always better to look at this period as a combination of October and November, which is what we always do. And the performance both of industry and of Bajaj is very, very heartening if we take October and November as one period, because then it just sort of takes the base effect out of it. So in the industry has probably grown at about 15% plus, and more significantly, the upper half in the industry, which is the 125cc plus segment, has grown at twice that rate, which is almost about 35%, showing that the higher end customer is coming back rapidly into the consumption cycle. And in this segment, the performance of Bajaj Auto has been almost twice that of the industry. So we are looking at the October and November period as we're quite satisfied with it, both from an industry point of view and from our own performance point of view.
Mr. Sharma, hi, good morning. Prashant here. Overall, for you, rural markets, I mean, is there acceleration, is there deceleration? One. And just a quick comment on whether the stress in some of the big export markets for you is easing a little bit at the margin.
Yeah. So I would say that the rural markets in general have been a little bit muted. They've not come back as rapidly as the urban markets have come. But what is ubiquitous is that the entry-level segment, whether it is in urban or semi-urban or rural, the bottom has fallen out of that segment. The very entry-level 100cc segment. And like I said, the one which has really pulled the industry up is the 125, 150 plus segment. Coming to your second question, certainly there is a decline in the emerging markets, but that decline is, I think, bottomed out. For the last 3 months now, we are seeing a constant level of retails. And in fact, our retails are much higher, slightly higher than what we are shipping out. So we were seeing, this thing tumble down in the period of March, April, May, June. And July onwards, we're seeing bottoming out and a marginal sort of increase in some markets, particularly African markets.
Okay. Hi. Good morning, Mr. Sharma. Well, things are pretty much in the air, actually, because there's a lot of uncertainty. But your competition here in India, that's Hero Motor, they have gone ahead and taken a price increase. Have y'all as well pushed through a price increase in the last 1 month or so? That's point number one. And the second factor is on the supply side. The constraints, they've eased out considerably.
Morning. Yeah, see, we took our price increases in the period of April, May, June, which is when we were seeing most of the raw material indices going up. And we sort of evaluated our stand at that point of time. And we were also seeing that there will be the big months of October and November coming along. And we wanted to do our price increases before some of these high volume months happen, so that we could get the benefit of that and recover the cost increases. As we stand now, we are not seeing cost increases. So therefore, we have not really changed our pricing in the last 1 month or so. Supply chain visibility is much better now, certainly. And the environment has certainly become more and more certain and clear.
So basically, Mr. Sharma, there are three pockets of weakness, right? Exports, where perhaps things have flattened out. The second one is rural, and the third one is entry level, irrespective of which part of India it is, urban, semi-urban, or rural. Can you tell us what percentage of your overall volumes would come in these three brackets, the sectors which have been impacted?
Well, as you know, almost 50% of our sales is from overseas markets. And this 50%, I would say about 60% of it is sort of soft right now, which is really the Africa area. The ASEAN region is doing extremely well. We are seeing, high growth over there. But yes, Africa performance is soft, but we are hoping that, as certainty comes around, it's all related to the dollar movements and what the Fed is announcing and the consequent impact on the currency, the devaluation and the availability of the dollar. But we are seeing some kind of a stability there. And I think that the customers are digesting the higher retail prices. I would say in a couple of quarters, we should see, these markets climbing back to their previous levels.
Go ahead.
And in the domestic side, our focus, our relentless focus has been on the 125cc plus segment. What we've done is we have re-engineered our portfolio, refreshed it, put in new platforms. And from the 125 to the 400cc segment, which is the upper half, we've got probably, about 12 different products, which is much more than any competitor would have. So they straddle the entire spectrum there and offer an incredible choice to the customer. And I think it's just at the right time because we are seeing an unprecedented gust of wind, which is supporting the premium level consumption. And with this very wide range, which services almost all sub-segments in that upper half, I think it is very, very well positioned to make up and to offset any weakness which would be there from the entry-level 100cc.
Right. Just one last brief point, Mr. Sharma. The electric three-wheeler, any updates, sir?
Like I said last time, that after our sort of trials and quite immersion with the auto rickshaw users, the drivers, we've gone back to modify our proposition. And the trials are once again on, and hopefully by March, we're trying to do it in this fiscal, but it could be March, April when we would place the three-wheeler electric commercially in India.
Right, Mr. Sharma, quickly, since we're talking about electric vehicles, you're going at a run rate of around 2,000 per month in the two-wheelers. When does it hit 6,000?
Well, we've already touched 3,500. Now that we have really good supply chain visibility, we are launching an expansion drive to enter more and more cities. We are in 37 cities. Hopefully, in the next 3-4 months, we should be in around 80 cities. And that should see a very significant increase in the sales of Chetak from January onwards. So from 2,500, we have come to about 3,500. December will be better than November, and we'll see a really significant increase in the Jan, Feb, March quarter.
So from Jan, Feb, March, we should see around a 6,000 per month run rate?
You see, it all depends on how many new stores are able to come in on stream. But I would say definitely we would be shooting for 5,000, 6,000 kind of numbers.
All right. We'll leave it there. Mr. Sharma, appreciate you joining in always and giving us a very candid picture of how things are coming along for Bajaj. Appreciate it. Thermax is the next corporate we're going to be speaking with now. The company posted a solid set of second quarter results. Beat across the board. Order book looks strong as well, but let's get a latest update in terms of how third quarter so far is panning out. 2 months, of course, in into the third quarter. Ashish Bhandari is Managing Director and Chief Executive Officer of the company, and he's joining us now. Ashish, good to have you with us here. Prashant, this side. Could you give us a sense of whether momentum so far in Q3 in terms of ordering has been as strong as what you saw in the second quarter? And if you can help us with some numbers, that'll be great.
Hey, Prashant, a very, very good morning. The first 2 months of this particular quarter, just like I had mentioned when we finished the previous quarter, continue to be good, no complaints at all. We are seeing a moderation in the overall activity, which was on a tear. Here we were seeing quarter after quarter an increased pipeline, increased orders. That is plateauing now, especially some of the bigger projects in refinery and oil and gas. They are not there anymore. That said, the base activity continues to be extremely strong, and it's continues to be multi-segmented, which is something that we are very, very happy with.
Morning, Rima here. So if you are seeing a moderation in large ticket items in the pipeline, especially in the oil and gas and the refinery segment, what will this do to your growth? Should we also bring down the growth estimates? What's the forecast?
I think on the growth side, we had said our last year was high in some ways. And the last year we had a couple of projects that individually were above 1,000 crores. Those we would have a tough time repeating this year. That said, if we're doing everything we can to get to the range of the order book that we had last year, which was our highest ever by a long, long shot. So still very, very optimistic, still a lot to do, and replacing bigger, possibly less profitable orders with a lot of relatively smaller, more profitable orders.
Okay. Hi, Mr. Bhandari. Good morning. You've been talking about transitioning from a coal to green solutions focus as well. So give us a sense about the current mix and how do you see this evolving? In the coming year, that's FY 23-24. You must be having some targets out there.
Coal overall is less than 15% of our portfolio. And even on some of the bigger projects that will come up in the coal side, a couple of supercritical thermal plants that have been announced, Thermax is not going to be focusing on that. Our focus is a lot more on energy transition and energy transition related solutions. Biomass, everything to do with biomass, waste to energy, bringing these kinds of solutions in a wider mix of capabilities, which means bringing different solution sets to work well with each other. Earlier in the year, we launched a product which can take 11 different kinds of fuels as part of our heating solution. Each product in that range sells from anywhere between 10 crores and 100 crores. And we have sold in the first 6 months, 7 to 8 projects of this kind, things that we were not doing previously. Our build, own, operate business on biomass continues to do extremely well. Our water business is growing in desalination and a lot of newer areas. Air pollution control, increased norms in terms of pollution management, doing well not only in India but outside. Okay. So it's a tremendous time to be in the energy space. There's just so much going on that we are extremely excited about.
Mr. Bhandari, you briefly spoke in your previous comment about the focus on profitability. That's been languishing in the mid-single digits odd. Do you have a goal, say by FY 24, we get back to around that 9 to around 10% in terms of margins? That's something that the street is tracking very, very closely. That would be the ambition, right?
So I would say, think of Thermax as a mix of 3 parts. Yeah, we have a projects business, which is extremely EBITDA, very, very high. Yeah, in the sense that it's always cash generating, very little relative new investments going into it. Profitability is relatively lower. It would be 5 to 6%, maybe even 5 to 8%, but it's always cash generating. And so that is one part of Thermax, and it works in a relatively competitive space. But as you can see, Thermax manages its cash very well, and that the origins of that lies in how we manage our projects business. So that is one part of our business. The second part of our business is the products business and product services associated with products. This is where I would say expecting a double-digit EBITDAs and double-digit profitability is completely expected, and that is the aim that we have. Continuing to grow our water business, our chemicals business, a small range of boilers, all of that, and getting to a double-digit profitability. The third part of our business is our solutions business. This is a build, own, operate business. This is where we are investing in terms of owning assets, and the metric to use out here would be more on return on equity and not necessarily on short-term profitability, because this is where we are building our asset book, and we'll continue to build our asset book, continue to put in money for the next foreseeable future, because we see a lot of opportunity out here as well.
That's very helpful, very, very nicely explained. Ashish, you said with regards to coal, etc., you're not going to participate in large projects, etc. Are you actively turning away work because you want to do on the energy transition side, or I mean, is that a...
So we're not, yeah. I think you can call it whichever way you want. We are turning away work in the sense that if we choose not to bid and there are only one or two players in this space,
right,
then that is one choice that we make.
But
that said, we are not turning away from coal at all.
But why would you not bid? Are they just purely sort of profitability, business reasons?
So partly profitability and business reasons, partly we have a different look at coal. Okay. Yeah, we want to come at coal from the point of coal gasification. How do you make coal cleaner? How do you work on carbon capture and related capabilities?
Sure.
So very much be involved in coal, but to set up large coal power plants and projects, that is something we are saying no to. But we are still very, very excited and interested in some of what it takes to get coal to become cleaner. Yeah, and that is our focus.
What's your current order book, Ashish?
Sorry, could you repeat that question?
The current order book as of 30th November?
So current order book is still tracking equal to or better than last year. Fourth quarter, I don't think we will be able to keep up. Our fourth quarter was, it was bigger than any quarter that we have had in the past, but it had two really big orders as well. But until Q3, we expect to be running ahead of last year.
I've got one final question for you, Mr. Bhandari, before we let you go. You explained the division-wise margins, but on a consolidated basis, should it be the high single-digit, 9 to around 10%?
So that's where I would say I don't think we want to look at it on a consolidated basis. Yeah, if a big project shows up, which is cash positive, which makes sense for the company, of course we won't say no. And if that brings the Thermax profitability down a little bit, that's perfectly okay. Yeah, these are very good cash generating projects, and we will take care of each part of the business as it should be taken care of.
All right.
So, and not look at what the consolidated number would be. The mix is the mix. We can focus on each individual parts and our actions there.
Got it. Ashish, it's a pleasure. Thank you very much. And it's always great to hear you explain the business very, very nicely. Appreciate it. Well, 81 points on the Nifty is what we have. So things have cooled off a little bit. I just want to make a mention a few other names which we've not highlighted so far in the broader markets. RVNL is back. I mean, RVNL is up about 4.5%. It's a top traded name right now. I'll skip through a multitude of IT, mid-cap IT names, which I've mentioned before. TV18 Broadcast, which runs this and other news channels, that is up 6%. TV18 Broadcast will come up at about just under 40. So that's a surge in volumes. What else? Root Mobile is coming up with a 4% surge. Was not there in the mix earlier in the morning. And there is Jayaprakash Associates. I mean, that complete beaten down name. That is up 10% as well. And on volumes, mind you, almost just under 11 rupees on that one. The other sort of same group companies, Network 18, I mean, full disclosure, the channel you're watching first is part of this network. Network 18 stock is also up about 9.25% or so right now. Ircon is up 3.5%. So one more railway name which is starting to participate on the upside. So lots happening in the broader market, even as the Nifty is seeing a bit of a cool off, just 30-40 points off. Mitesh is back with us with his 10 a.m. calls and what he wants you to do. Mitesh, hi, welcome back. Morning.
Yeah. Good morning again, Prashant. There's some cool off from the higher levels, but I think overall we'll still maintain a positive bias given the fact that we're still trading above the key intraday pivot levels. My worry has been overbought levels, but then I think just trail your stop losses to protect from any kind of strong profit booking. The current level would be closer to about 18,700 on the Nifty, so maybe 5-10 points below that on this spot. Having said that, HDFC Bank has been consolidating for the last few days, could give a breakout. That's a buy with a stop at 1610 odd levels and a target of around 1680 on the upside could be looked at. The other one is from IT name. The IT pack is buzzing very nicely. FSL has given a good breakout over the earlier pivots. So that's a buy with a stop below 110 half for targets of around 117.
Okay, all right. Thanks a lot for that, Mitesh. By the way, before we slip into a short break, just pull up the Nifty. It's come off the high point of the day, but I think the bigger focus should be on the mid-cap index. It started off in style, but the mid-cap index is now up only around 0.2%. And the advanced decline ratio, well, both those two lines, they're getting closer to each other. Remember, the start of trade, there were close to 9 stocks that were advancing for every 1 stock that was declining. Now, in fact, it's narrowed down to around 3:1 odd, which is not bad. But you like to see those lines stay as apart from each other as possible so that the breadth of the market does improve. Slip into a short break. On the other side, Manisha Gupta is waiting for us. She'll tell us about what's transpiring in the commodity space.
As e-rupee goes live starting today, this means a sovereign digital currency becomes available to all of us, common citizens, from today. What does this exactly mean? Lata's here with the details. Lata?
That's right. It's a digital rupee that we are getting, a digital currency, and it is not a cryptocurrency. It's backed by the central bank. Basically, RBI has chosen 4 banks, SBI, ICICI, Yes, and IDFC. And what these banks have done is they already have sent emails to select customers and merchants. Now, they're also ready with their app. These customers, if they are, want to respond to that email, will download the app, get their SIM verified, and then they will be allowed to download a digital wallet, a purse. And then they will have to link that wallet to their savings account. Once they do that, they will be able to transfer money from their savings account to this wallet. It will come in the form of e-tokens. Then they will be able to pay from that wallet to another person who is also chosen by the bank to have a wallet. They can make payment without involving the bank. They can also pay the merchants who have been selected by those banks. But for the merchants, they will have to use a QR code, which will be given to the at the merchant locations. Now, you must think of this e-rupee as cash in your purse. Okay, therefore, one thing, it will not earn interest because you've withdrawn it from your savings account, and it will come in the same denomination, 5 rupee notes, 10 rupee notes, exactly as cash. It's going to be launched only in 4 cities, or getting launched in 4 cities, Mumbai, Bengaluru, Delhi and Bhubaneswar. And in the next few weeks, 4 more banks, HDFC, Kotak, BOB and Union Bank, will join this closed user group. It's a closed user group. And 9 more cities are also likely to get this. Ahmedabad, Gangtok, Guwahati, Hyderabad, Indore, Kochi, Lucknow, Patna, Shimla. All these will also be included. Now, all this is experimental. It's a pilot. So very few people are involved in the CUG. Once it becomes robust, the distribution of cash, its exchange, its recording. Once the system is robust, the pilot will be expanded to more and more people. The point is, will it become popular? If I can pay you so easily over Google Pay or using UPI, why will I want to download a wallet and look for another person who has a wallet and then pay that person? Will it become popular is the question. But if if the system is as smooth as Google Pay, as smooth as UPI, maybe people will, because it has one advantage or one difference. It is anonymous. When you pay on UPI, the banks know that this person has debited and this person has been paid. If you do it on the e-rupee, it is like paying from your purse to someone else in cash. So there is anonymity. Maybe that's a feature that can make this successful, but ultimately it will depend on the smoothness and customer interface of the technology.
Okay, thank you very much, Lata, for that. Let's now turn our attention to the commodity space. Manisha is here with us in the studio. Manisha.
Thank you so much for that, Rima. Well, what a last night and what an end to the month of November when it comes to the commodities as a sector. We've seen almost everything gain up. When you look at the industrial commodities, agriculture commodities, overnight itself, it has been around 3 to 6% of gains for various of those commodities. Well, the reason that you saw that the prices ran up was the US Fed Chair Powell signaling small rate hikes going forward. Markets, in any case, have been looking at the US dollar declining for some sessions now. That has been somewhat supportive for all of these dollar-denominated commodities. And then China, which has been a wild card, a big uncertainty, also seems to be opening up its markets. A lot of restrictions seem to be easing off. So that means that Chinese demand expectations could be coming back into the fore as well. For the crude oil prices, and I want to start with that because we saw 3% of gains overnight there. The US inventories have declined by 12.6 million barrels, which is much higher than the street expectation of 2 million barrels, also was supporting crude oil prices. So it has been a 3% of gain overnight. But when you look at the month of November, we have seen a 6 to 8% of a decline in the crude varieties, both of these. The US output in the month of September gained up as well. So that's what's slightly weighing onto the space right now. What the street is watching out for is the OPEC and allies meeting on 4th of December. They may keep the output status quo because they're meeting virtually, not in person. So that means not too much is expected to be discussed there. But that's about crude. Almost everything for the month of November also has posted gains there. Take a look at the gold prices. We're trading at a 3-month highs onto this one. Silver is trading at an 11-week highs. So overnight, we've seen 2 to 5% of gains for gold and silver. For the month of November, gold has seen the best month for this year, and for the silver as well since 2020 December. This has been the best month as well. Biggest rise in the month of November since July 2020, and this is the first monthly rise that we are seeing in case of gold after 7 months of loss there. For silver as well, after 5 months of decline, this month clearly has been on the positive side there. Take a look at the metal prices then, and copper has seen strong gains as well, 4% up in overnight markets. And for the month of November, we have seen nearly 8% of gains coming in. It's a 2-week highs for copper. Aluminum gained 3.5% overnight, 11% up in November. And zinc prices have gained up 12.5% for the month of November as well. Similar is the case for the agri-industrial commodities as well, even as rubber was trading at a 2-year lows a week back, but we've seen 5% of a jump up coming into that one last night. So 9% up on a month, and cotton 18% up now in the month of November.
All right, Manisha, thank you very much for that. That's commodities in focus. 83 points, so still off the highs and holding, but and broader markets, as I highlighted a bunch of names, is firing. Shilpa Medicare is in focus. Let's put the name up. Ekta is standing by with more on this one. Ekta, hi, morning.
Thanks for that. Well, the Unit 4 in Telangana, in fact, was inspected by the Canadian regulatory authorities, which is basically Health Canada, and they've given their nod to this particular facility. This is important news for Shilpa Medicare because this is the same facility which is still under the scanner when it comes to the US drug regulator. Now, in 2020, the US drug regulator had issued a warning letter. Remember, they had received multiple observations for this particular plant, and then it got escalated to an import alert in 21 as well, which means they are not allowed to supply to the US. With this approval, there is a hope that maybe the other regulator, which is the US and works very closely with Canada, could probably look at this particular plant more favorably.
Okay, all right. Thanks a lot for that, Ekta. Well, Mangalam joins us to run us through some details on Hudson Agro. Mangalam?
Well, Hudson Agro has, the board has announced that they will be meeting on December 3rd to consider the details of their rights issue. Now, this is not entirely unknown because in September itself, the company did announce a 400 crore rights issue, and now they're only meeting to finalize those details. So that is something that the street will like. Remember, the company had also announced a 700 crore QIP in August itself. So all these things will actually improve their balance sheet because the total debt for the company as of September, long-term and short-term, was close to around 1,500 odd crores. So 700 crores of QIP plus 400 crores of rights issue would give them 1,100 crores, and that would virtually make the company net debt-free with the cash that they have on their books. So all of these, initiatives, the street likes the stock up in double digits.
Mangalam, thanks very much. We'll, of course, track that and more, but